The Forex market is open 24 hours a day, but not all hours offer the same trading opportunities. And one of the biggest mistakes traders make is thinking they need to watch the charts all day to get a good move. They need to stare at their screen all day. But that is not how smart traders operate. Smart traders, professional traders know that the market has specific windows where trading volume comes in, volatility expands, and high probability setups tend to appear. These windows are what we call Q zones. And if you understand them properly, you will stop forcing trades during dead hours and start focusing on the times that actually matter. In this lesson, I want to talk about Q zones and timing. Because even if your entry model is good, even if you got a perfect setup, timing still matters. It's like half of the battle. Okay, because you can have the right setup, but if you're trading during the wrong session at the wrong time, when the market is dead, the market may simply not move the way you want it to move. How many times have you found your perfect trade setup right after you enter the trade, the market just consolidate? Or the market just start reversing heavily against you and then start going in a way again. All because you're trading at the wrong time. So to put it simply, Q zones are specific times of the trading day when high probability setups are more likely to appear because volume and participation increases. So once again, the market is open 24 hours a day, but the best opportunities comes during certain windows, and those are our Q zones. Right, we want to trade during Q zones, not during random hours, because Q zones, these are the period where the market tends to deliver clean price action, liquidity sweeps, reversals, and continuation. All right, so once again, Q zones, they matter a lot to us because this is where trading volume is higher, volatility is better, price delivery is cleaner, which means there's a higher chance of liquidity sweep, manipulation, and real expansion. And the market is just, basically the market have more fuel to actually go and hit your take profit. That's it, right? Like these are the times right here where the market has a lot of fuel. So if you combine a good trade setup at a right time, it's so much more stronger than a good setup at a wrong time. Okay, like you can have a higher chance of hitting TP fast if you have the same setup at the right time compared to if you have it at a bad time. So the following times right here are in UTC -4, right, which is the Eastern Standard Time. All right, so all of these time that you can see on the screen right here, this is the Eastern Standard Time. So based on wherever you are in the world, you might want to do some conversion, right? You can just go and search what these times are in your particular time zone on Google. It's very simple. So let's talk about each Q zone. First, we got the Asia Q zone. Asia Q zone, this is where the best currency pairs to trade during this period of time is your Australian dollar, the New Zealand dollar, and the Japanese yen pairs. And this is usually during the 8 p.m. to around 12 a.m. Eastern Standard Time. All right, so if you plan to trade during this window, then you are much better off trading these particular currency pairs, AUD, NZD, and JPY pairs. This session is usually a lot slower, but it's also kind of more cleaner for certain currency pairs. But this is not where you can expect like the big explosive move on the USD pairs, right? Because in the Asian session, price tends to be like quite consolidatory, right? Like it just tends to like chop around, move sideways a little bit, especially for USD pairs. But if you're trading these currency pairs, it could provide a decent amount of trading opportunities, right? Like the Australian dollar, the New Zealand dollars, and the Japanese yen pairs. And then next up, we got the London Q zone, right? Which is my favorite Q zone. This is the Q zone that I specialize in. This is the Q zone that I've been focusing on for the past few years. And it's also the Q zone that I trade on a daily basis, right? Like you can see all of the trade that you have seen me take on my second channel, Brad Trades, is like 90% are probably taken during the London Q zone. Maybe 10% is taken during the New York or Asia Q zone. But 90% of it is London Q zone. And the reason why I choose to trade this Q zone is because it's the afternoon time in my country, Singapore. And not only that, but also the currency pairs that I trade tends to provide the most amount of trading opportunities during this period of time. And that is the Euro pairs, the Great Britain pound pairs, right? So Euro USD, GBP USD, GBP AUD, right? Euro NZD, right? Whatever that involves Euro and Great Britain pound, this is where you will see quite a lot of trading volume, which automatically means quite a lot of good old trading opportunities, right? So there's a certain pattern when it comes to this Q zone itself. If the daily structure is bullish, what tends to happen is that price will sweep the Asia high, creates the high of the day, and then goes down. Okay, once again, not always, right? This strategy is known as the Asia sweep strategy, which I've already covered in one of my YouTube videos, which you can search it up. But basically, during the Asia session, let's say price is consolidating just like this, and then when it's consolidating, you can identify the high of the consolidation and the low of the consolidation. So this becomes the Asia high, and then this becomes the Asia low. So if the daily structure is actually bullish, what tends to happen is that during the London Q zone, price can come up there, sweep the Asia high, create a high of the day, and then starts coming down. And then if price is actually bearish, then what tends to happen is that price can come up there, sweep the Asia low, right here, this is the Asia low, and then reverse and go back up. Not always, but sometimes this Asia sweep strategy works really, really well, right? So yeah, that's the London Q zone, my favorite Q zone to trade. I really do think that this is the best Q zone. It's like, it's not too volatile, but it's also not too slow. It's perfect if you're trading Euro and Great Britain pound. Next up, we got the New York Q zone, right? So the New York Q zone is 7 a.m. to around 10 a.m. Eastern Standard Time. This is where news usually appear, right? This is where high impact news are usually released. And this session is best for US dollar pairs, right? I mean, like, honestly, it's kind of like self-explanatory, right? Like Asia session, this is where people in New Zealand, Japan, and Australia are awake. And then London session, this is where people in Europe and London is awake and actively trading. And then New York session, this is where traders in the United States are actively trading, right? Which is why you can expect more trading volume for the USD pairs during the New York session itself. Now, this doesn't always happen, but sometimes it does happen, where you can see we got like a consolidation that is formed during the London session, and then price tends to retrace back to the London range and then maybe continue the swing structure. It really depends on the context of the market and the condition of the market for that particular set of particular day itself. Yeah, so sometimes you can see London give you like a expansion to the upside just like this. And then New York session, it might give you like a little retracement and then continuing the trend direction that was established during the London session. Or it could even cause the entire trend direction to shift from bullish to bearish, right? So yeah, it really depends on the market condition. And then next up, we got the London close, right? Which is around 10 a.m. to 12 a.m. This session is quite good for USD pairs as well. There's a little bit lower trading volume, right? This is where you see price tends to retrace back to the daily range. But, you know, if you want to catch small retracement based opportunities, this London's close session would be pretty decent for you. So those are the 4 different Q zones, right? You must understand that not all Q zones are the same. Asia Q zone is usually a little bit more slower, a little bit more range bound, where the market is just going sideways, right? London session, London Q zone, this is where you see like the market expand heavily. And then New York session, this is where price can retrace back to the range that was established in the London session and then either continue or cause the entire trend to reverse. And then London close is back to, you know, the market being slow again. But, you know, if you are catching like small move, this could be decent for you as well. Each one of these Q zone has its own personality, and you need to make sure that you are matching your expectations to the session that you are trading. What I basically mean by that is that if you are trading Euro USD, you cannot expect to get the same volatility in Asia session as you do in London session, right? So for example, if you're trading Euro USD on Tuesday and you trade it during the London Q zone and price them to move very, very fast, hit your TP very, very fast. And then on Thursday, you decide to trade Euro USD during the Asia session. And then now you realize that, wait, same setup, same entry model. But why is it taking so long for price to hit TP? Why is price not even hitting TP during this entire Asia session? What is price doing? Why is it so slow? So that's what I mean when I say that you need to manage your expectation, because different currency pairs have a different volatility depending on the session that it's in. Okay, so different currency pairs move differently at different speed, based on the Q zone it's at, right? Based on the time that you are trading it. So yeah, don't just forget about the timing, right? Make sure that you combine the currency pairs that you're trading with the right time. So if you're trading the Asia Q zone, then perhaps you want to be trading these pairs. If you're trading the London Q zone, trade these pairs. If you're trading the New York Q zone or the London close, then you want to trade the US dollar pairs. And my best advice for you would be to pick the session which you have your mental faculties, right? Where you have the capacity, the mental bandwidth to actually trade. If you're working a 9 to 5 job based on the Eastern Standard Time, London session might not be for you, right? You might want to trade before you go to a 9 to 5 job. Then if that's the case, New York session will be pretty decent for you, right? Or if you are a single mom with like 5 kids and you realize that you can't trade at night, right? Because you have to put your kids to sleep or whatever, and you have to fetch them back from school, then you might want to trade the London session, right? When you, okay, actually London session wouldn't make sense, right? Maybe because like this is 2 a.m. to 5 a.m., so you'll probably be asleep by then. Maybe you want to trade during the New York session as well, right? Like in the morning time where you are free, right? So my best advice would be like find a time in which you can fully focus on the charts and just stick to that session. And then once you determine the time you want to trade in, then go and choose the currency pairs in which you want to focus on. So if you want to trade during the London session, right? If this is the session that you pick, then these are the currency pairs that you want to be trading. Euro and GBP pairs, right? Euro USD, GBP USD, GBP AUD, GBP JPY if you are feeling a little bit adventurous, right? So yeah, that's my best advice. Don't try to trade every pair in every session. Find a session in which you are the most free to trade and then focus on the currency pairs that provides the most amount of trading opportunities during that session. So now let's go on to the charts. So there's this indicator that you can use to like just easily identify the Q zone. So you can just go into indicators, come here, search in Q zones. And the one that I have on the screen right now is this one right here, ICT Killzones plus pivots, right? So if you click on that, you have like this little indicators that you can see on the screen right here. Where do you go? There we go. Yep. So yeah, this is the indicator itself, right? So if you want to know how to get an indicator, just go search here, type Q zones, and then just click on this one right here, ICT Q zones plus pivot. I personally hate indicators, right? Most of you guys have been watching my video for quite some time. You will know my stance on indicators. I hate them. I don't use them at all. But you know, this is something that can really help you out if you are new to trading, right? If you're new to Forex trading and you still can't figure out what time is a Q zone. So if you step on this indicator, you will be able to see that, okay, this is the New York morning session, this is the New York PM session, and then this is the London session, the London open to the, this is the London open low, this is the London open high, this is the Asia high created, Asia low, right? This is the Asia session, right? You can see based on each session, there's a like different move, okay? So if you just scan the price section from left to right, like what we can see on the screen right here, Asia session, Euro USD, consolidate, okay? Consolidate a little bit, establish the Asia low, establish the Asia high. And then when London session opens, right, this is the overlap between Asia and London session, price came up there, swept the Asia high, and then caused price to start coming down. And then during the London session, price continued going down, and then during the New York session, you can see this is where price retraced a little bit and then continue with the trend direction that was established during the London session, and then so on and so forth. Another example right here, like I said, don't just depend on these too heavily, right? Because sometimes, depending on the market condition, depending on the context of the market, price will move differently. What I mean by that is that even though the textbook, the law, the theory says that, you know what, Euro USD is supposed to consolidate during the Asia session. Sometimes because there's so much momentum, there's so much pressure in the market, so much volume, so much liquidity in the market, it might not want to consolidate during the Asia session, right? It might want to actually like trend a little bit during the Asia session. Also, it might not want to move during the London session. And as a result, you will see price consolidate a little bit during the London session. So use this as a reference, right? But like don't just like use it as a crutch, okay? Like just see the market for what it is, observe the market conditions and trade accordingly. Don't try to anticipate the market, don't try to control the market, don't try to predict the market, observe the market. react to what the market does. Okay, so whatever the market gave you, react accordingly. So in this case, you can see right here, New York session started going up, right? You can see New York session tends to have a lot of liquidity, and the Asia session starts slowing down again, right? You can see the volatility starts slowing down again. London session start picking up the volatility, and then another example right here, New York session over here, so on and so forth. Okay, so a lot of beginners, what they tend to do is that number one, they tend to trade all day long, right? They will wake up at 9 a.m., they go on to their charts, and then they trade all the way to 9 p.m. I learned this the hard way. I know this from like first-hand experience because that was what I used to do as well. You know, I'll wake up in the morning, first thing I do, go onto the charts with a cup of coffee, and just like stare at the charts all day long. I was so addicted to staring at the charts that I don't even dare to go to the toilet. And what tends to happen is that when you do that, you might make money during the Asia session in the morning. But then if you continue trading the London session and the New York session, what tends to happen is that whatever money that you made from the Asia session, you give it back to the market during the London session. And then London session, you start feeling emotional, and then you start revenge trading, over trading, and then now you lose money, and now you're down bet for the New York session. And then maybe at New York session, you make back a little bit of money. And then tomorrow during the Asia session, you lose money again. And then London session, you make money. New York session, you lose money. It's just this cycle of like unprofitability that you can't seem to get out of because you are trading way too much. Okay, the cost of over trading is you give back your profits back to the market, and the hidden cost of over trading is that you start to feel analysis paralysis, which means you analyze the chart so damn much that you just can't think clearly anymore. Right? You can't establish a trend direction. You are lost and confused in the market because your mind is just so worn out. You are just so tired. So don't try to like trade all day. Instead, what you want to do is to pick the session in which you want to focus on. And like I said, trade the best that provide you the most amount of opportunities during that session. All right, so now I'm going to give you guys like a very systematic framework that you guys can follow, like step by step, to apply this right here. Step one is to come here and determine which session you want to be trading. Okay, like whether that's the London session, the New York Q zone, or the Asia Q zone, whatever it is, pick the Q zone you want to focus on. All right, just pick one. Once again, if you don't know which one to pick, ask yourself, which one is the best for my lifestyle? Which one is the most sustainable to me? Which one can I stick to for the longest? Right, whichever your answer is, choose that one. Once you choose the session, then you want to choose the pairs in which you want to be focusing on. Right, so if you choose London session, then you want to focus on Euro, USD, GBP, USD. If you choose New York session, you want to focus on anything that have USD inside. Right, Euro USD works, GBP USD works, anything that have US dollar inside. And then once you have these two steps in place, then you want to be focused on trading that session, right? So during 2 a.m. till 5 a.m. Eastern Standard Time, let's say you're trading the London Q zone, you want to come down here to Euro USD chart, and you want to develop your higher time frame trade bias. And then you want to go to the medium time frame, map out your point of interest, map out your supply and demand zones, whatever. And then once price step into those zones, you go down to the lower time frame and you search for your entry model. You search for your entry confirmation. So whatever that we have learned so far, right? The multi-time frame analysis, you know, the supply and demand zones, all that stuff, you want to apply it on the session in which you choose to focus on. And then you just wait for your entry confirmation to appear during that session, during that Q zone. And when it does, right, like for example, let's say this is your trading opportunity, you see it during your Q zone, you execute the trade. You enter the trade with confidence, right? You wait for a price delivery, right? You wait for a liquidity sweep, market shift, whatever. You wait for entry model. If it appears, you enter into the market. If it doesn't appear during your Q zone, do nothing. Okay, do nothing. Do not force a trade. If price haven't get to your desired price point and your entry confirmation haven't appeared, stay out of the market. All right, so during this 2 a.m. to 5 a.m., if your trading opportunity appears, if your entry confirmation is present in the market, go and take the trade with confidence, trusting that it's going to play out because there's sufficient liquidity and volatility in the market, and you have done sufficient preparation. If your opportunity does not appear, you stay out of the market, so you don't trade. And then tomorrow, you do the same thing again. You show up at this time, this period right here, scan the charts, look for trading opportunities. If there is, enter. If there isn't, chill, right? Relax, do nothing. And then the next day, do it again. And do that all the way from Monday to Friday. So yeah, that's the power of like Q zones. Majority of my trades, like I mentioned, is taken during the London Q zone itself, right? With that being said, I just want to say that one of the biggest mistakes that traders tend to make is trading outside of their edge. That is exactly why inside Edgeflow, right, which is my trading super app, we have actually built a feature that allows you to define your own trading window. So you can literally determine when to trade and when not to trade, as you can see right here. So for example, if you want to trade during the London Q zone, which for me is going to be the 2 p.m. to 5 p.m. Singapore time, I'll just come in here and set it to like 2 p.m. to 5 p.m. Right, 2 p.m. to 5 p.m. And if right now it's not 2 p.m., this trade button will be blocked, right? This trade button will literally be grayed out and I will not be able to open a trade. So Edgeflow literally forces me to just trade during my Q zone, just trade during the London Q zone itself. This is such a useful feature to have because when you have such a guardrail in place, you're not relying on discipline. You are just implementing the discipline into your trading system itself. You won't have the urge to trade the Asia session. You won't have the urge to overtrade during the New York session because you can't. You physically can't press the trade button. So yeah, that's just one of the many cool features that we have inside Edgeflow. So if you want to stick to a certain trading window and you find yourself not being able to do so because you got itchy fingers or because you are bored and you want to make money for the day itself, you might want to try out Edgeflow, right? Try to set these guardrails and build these guardrails into your system itself. So with that being said, just understand that Q zones, all of this stuff is cool, right? But it's not just going to magically make you profitable. It's not like, oh, I just need to trade USD during the London Q zone. I just need to buy when that happens and then I will make money automatically. No, that's not how it works. Once again, it works best when you combine your multi-time frame analysis and the other market mechanics concepts like auto blocks, premium and discount, supply and demand, so on and so forth. Q zones does not replace your entry confirmation. It does not replace your entry model. It does not replace your higher time frame buyers, your immediate buyers. It just helps you improve the timing of your entry model. So like I said earlier, if you found the entry trigger at the right time compared to if you find it at the wrong time, it can make a big difference. You finding it at the right time will allow your trade to go to TP very, very fast. You finding it at the wrong time will allow the trade to maybe stall a little bit or maybe not even hit your TP at all. So the Q zones is the timing part of the equation. Remember, success in trading equal developing the right trade ideal at the right place at the right time. The right place is all about your supply and demand zones, your order blocks, your point of interest. The right time is about Q zone. It's about trading during the Q zone, where institutions are the most active. And then later on, where we talk about liquidity concepts, this is where we'll talk more about how to trade in a much more precise manner. Okay, so just to sum up everything that we have learned so far, to keep it simple, Forex market is open 24 hours a day, but not every hour gives you the same quality of opportunity. The best setups usually appear during our Q zones, right? The London Q zone, the Asia Q zone, and the New York Q zone itself. And also the, what's the other one? London close. Yeah, London close. And then based on the Q zone in which you are selecting, choose to focus on the currency pairs that provides the most amount of trading opportunities during that Q zone. So Asia Q zone, it will be the AUD, NZD, and JPY. London Q zone will be Euro and GP. New York Q zone will be the USD pairs, right? Same as the London close. The goal is not to trade all day. The goal is to trade the right windows. because I want you guys to remember this, all right? In trading, you don't get paid for how hard you work. You don't get paid for the amount of hours you put in on the charts. You get paid based on your decisions. You get paid for making the right decisions. Okay, so it's not about working hard. It's not about like sitting over here, slaving your ass off, trading for 12 hours a day. Hell, I trade like less than a few hours a week, and I still make 6 figures a month consistently. And it's not because I'm working any harder than you are. I'm working smarter. I know how to identify my trade bias, and I know how to position myself at the right time to, once again, capitalize on the luck itself. Yeah, so you don't see me like slaving on my charts every day, having like red bloodshot eyes. No, I'm chill, man. I'm living my life. I know what trading is for. Trading is for me to live a life of freedom, not for me to be a slave to the charts. After all, like that's why we started trading in the first place, right? So yeah, focus on one session, right? One Q zone. And if you want something to enforce it, if you want a trading app to enforce it, try Edgeflow. Link in the description. So with that being said, I hope you guys have enjoyed this episode itself. I look forward to speaking to you guys in the next episode. And as always, remember, you're just one trade away. Mwah.